All right, welcome back, everyone. So today's going to be something different. We're just going to go over the results real quick, and then we'll get into next week's. And then I've got the charts on the bottom right to hopefully help out a bit. But to start with, we'll just skip through a few. So we had Horizon, who are the coal company, so they did quite good, which was to be expected. We had Suncorp with the insurance, did quite good, once again, more or less to be expected. Transurban did quite poor, which, yeah, expected. So far, nothing unusual. And then Challenger, we get onto the first one. If you look at the chart here, the 1 year chart, they really exploded. Then they fell down, and then they've done really good in results. Not one I would have picked for earnings plays, but as you can see, they've done really well. So if you use the momentum from the earlier of the year, you maybe could have got that one, but yeah, not one I was interested in. Then we had MP1, who did just average. IAG did good. Commonwealth Bank did good. Commonwealth Bank since pulled back though, which is a little bit interesting, but they did announce an off-market buyback, which is different to ANZ and NAB. So ANZ and NAB are doing an on-market buyback. Commonwealth Bank are doing an off-market. The difference here is, so on-market, they will buy back the shares. So as you have your bid and your ask, they basically just buy back shares from that. Whereas the Commonwealth Bank will send out to shareholders a letter saying, we want to buy back your shares. This is the price we're offering, blah, 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 blah. Do you accept or decline, essentially? And then that's what's going to happen. So a little bit different, but yeah, just another way to use the cash. AMP, their results, I completely missed that, but I'm going to presume they were trash. I don't really care about AMP, to be honest. Dow did quite good. They're in the mock portfolio. I think they were up 5%, and then they're up 5% the day after. The revenue numbers to me didn't actually look that impressive, but I think what the market did like was the profit and then their outlook, which was quite good. Telstra did surprisingly quite good with a good outlook. Last year, their results, they said they weren't expecting to do well again until 2022, 2023. And they've since done earlier than that. So maybe a turnaround stock, once again, not one I'm really interested in. Then we have a bunch of random companies, AGL, Mirvac, Goodman, QBE, Baylor Technology, and then Baby Bunting to finish it off. Baby Bunting's, I looked at their results and they did quite good. And the issue is how they're going to expand. And the problem with retail is the way they expand is by putting up new stores. But Baby Buntings have been delayed largely because of COVID. So they want to expand into New Zealand. And I think they've only got like 2 stores based on their annual report. And so they want to keep this up. But the problem is they obviously can't because of COVID. So then they thought of doing a loyalty program. They've noticed with the loyalty program, people spend more. So that's the other alternative they have, I guess, to growing. Once again, not one I'm really interested in, but certainly worth a look. All right, let's go through next week's real quick and we'll highlight the standouts because there is a bunch this week, so I'm not going to go through all of them. JB Hi-Fi is the first one I think to note. So I did an analysis on JB Hi-Fi a few months ago. The problem you have with JB Hi-Fi is more or less the same with Baby Bunting Group. They have all this extra cash because of COVID, and they don't really know what to do with it. So Baby Bunting are trying to launch in New Zealand and expand New Zealand. JB Hi-Fi have all this extra cash, and they don't really know if they want to build more stores, which is obviously what they want to do, but you can't just do it inefficiently. So Baby Bunting Group, for example, after 5 years, notice their sales have just sort of flatlined. So from 0 to 5 years is when they really make the growth, and then after 5 years, it just tapers off. With JB Hi-Fi, I haven't looked into it, but I presume it would be similar. So it'd be interesting to see how much they've managed to build out during this COVID period. Then we have Bendigo Bank, not really interested. BlueScope Steel is one I'm interested in. I suspect they'll do quite good because they're with the iron ore price. I think their outlook will be quite negative, which the market might take more into consideration. It'll be interesting. Car sales is one I actually have in the share market game. I expect them to do well. They've had a big run up pre-results. We quickly pull them up. Let's see their chart in 3, 2, 1, pow. Beautiful chart. So yeah, they've had a massive run up. One I'm expecting to do good for results. Whether it matches the run up is another question though. BHP, more or less, I think will be the same with Rio. Rio Tinto is more profit focused. BHP is more growth focused. So if you want a more growth focused play, you can go BHP here. Not one I'll be touching with how much commodities have fallen off a cliff the past week, but it's another option. Magellan, run by Hamish Douglas. That's always a good one to keep an eye for. Brambles, not really interested in this year. Breville is one. So Breville's one I actually looked at earlier in the year, and they seem like an earnings play trap. So if you look at their results for the past year, they're very skewed to the first half in the sense first half they do really good, and the second half sort of just falls off a cliff. I have no idea why, but in their outlook, I think they made 100 million for the first half of the year. This is off the top of my head. And the second half of the year, they wanted to make, I think they were aiming for like 130 mil in total for the year. So basically, they're only going to make a third of what they made in the second half of the year, which seems strange to me. But yeah, that's one. If you want to look at the numbers, feel free to go ahead. I'll quickly pull them up so you can look at the chart, but that's not one I'm particularly interested in, and I think is a bit of an earnings play trap. I suspect we'll see this big spike, or we'll taper off and we'll come right back down to the $30 mark. But once again, who knows? Woodside, don't expect to do too well. Production was quite low. Oil prices fallen off. What else we got? Nearmap. Nearmap are having court issues at the moment in the US. So even if they have good results, which they put out in the Outlook earlier, a month or so ago, they said, hey, we're having really good results. This is what to expect. The market went up 10%, and then since then it's fallen straight back down. So who knows what's going to happen over there. Then we have Coles. Coles got bought out by Wesfarmers because management at Coles were horrendous. Now Wesfarmers own a large chunk of it. So I suspect Coles will do well because Wesfarmers just might turn everything to gold. And then we have Domino's. Domino's is very interesting. All right, Domino's is one that I don't think gets enough attention. So the reason Domino's has done so well, if you compare Domino's to virtually every other food chain in terms of McDonald's, Subway, Hungry Jack's, whatever you're into, Zambreros, Nando's, all that sort of stuff, Domino's have their own delivery drivers. And if you would have noticed during lockdown, Uber Eats and stuff have exploded because of their delivery drivers and the delivery system. Domino's don't have to fall for that system. Domino's have their own system in place. So they get all the benefits of getting all these extra customers, and then they just pay their own drivers, which is why Domino's has exploded, and particularly they're growing really well over in Asia. So Domino's, that's why their share price has climbed. If we pull them up real quick. And there's one I keep an eye for. Not one I'm interested in buying, but definitely one where they benefit extremely large from COVID. But yeah, as you can see, they run extremely hard as well, so not one I'm interested in touching. CSL, the boomer stonk of the boomer stonks. Very interesting one to keep an eye for. Yeah, I own them in the mock. Not want to be buying for earnings though. I think earnings will be big. So you've got analysts expecting very mediocre results with a very poor outlook, but they are a monopoly, so can't really discount them too much. All right, what do we got next? PME on Wednesday. PME is one I love. So my very first YouTube video was on PME. Company I absolutely love and would love to buy, but I think they've run too hard. So PME make their money per use of their scanning technology. The problem is with COVID, last year's results, they said they're struggling to get usage because people aren't going into radiology or healthcare clinics, so on and so on, as often. Now, the problem here is if they're not going in as often and they're not getting as much usage, then the revenue goes down. And as such, if revenue is down, then your profit numbers are also going to be down in terms of total amount. So not one I'm going to buy on the lead up to earnings. One I expect the market will not take a liking to with earnings, and then I'll look to buy on the dip, but see how that goes. If they keep running, I'm still not going to buy in. I'll just watch and admire them, I guess. What else we got? South 32 on the 19th. I own them in the mock, and I also own them, but in real life. But see how they go. I expect them to do quite well. And we're starting to come to the end. Thank God for that. Look at week 3, eh? There are so many earnings plays potential. I am dodging all of them. Hum will be interesting. I believe Hum are the new, like, buy now, pay later thing, aren't they? They follow that sort of area. Yeah, very small as well. Yeah, chart looks like absolute horseshit. All right, not one to touch. And then we finish off with the Dares, Inghams. Inghams will be interesting. So Inghams have sort of tapered off, and they're very highly shorted. And what I did for earnings plays in February, but this was largely because they're running out of room to grow. And so the reason they're running out of room to grow is because their chickens have already expanded. Their chickens, the product, their chicken essentially has expanded so far that it's a struggle for them to go any further. So the only way they can make more money is to cut costs. They've already cut costs so much. So the issue is if you've already cut costs and you've expanded as far as you think you can expand, what else do you have left to grow at? And that's the issue they're having. So one I'm not interested in, that's why it's heavily shorted, but once again, it's, yeah, not one I'd touch. Then we have Sydney Airport, although I think Sydney Airport, I haven't looked at them since the acquisition offer actually. Have they fallen off a cliff since then? Or have they gone up? They've sort of tapered around. Okay. So with acquisitions, the more likely the market thinks it's not going to go through, the more the share price will drop. And the more the market thinks there's going to be a new takeover offer, the more the share price will rise. So if we look at someone like Crown, they actually had the share price rise after the first takeover offer, and then it was correct because Star ended up offering a merge offer and then pulled out and so on and so on. So their stock's gone all over the place. But yeah, that's basically the main things to look forward to next week. So ones I'm keeping an eye on for a quick summary. On Monday is car sales and BlueScope Steel. That's all I'm really interested in. Tuesday is Magellan. BHP, Breville. That's all I'm really interested in for those ones. Wednesday, Nearmap, we know the results, so not really too fussed about that. Coles, Domino's, and CSL will be the ones I'll be looking out for on Wednesday. And Pro Medicus. Forgot about them all the way down at the bottom. Thursday, Redbubble, if you really want some meme. I don't think they'll do well, but we'll see. South 32. And yeah, I don't really have anything else. Origin Energy. So this is one I think could do well. Not one I like, but yeah, we'll see. And then on Friday, we have Ingham's and Cochlear. I think are the only two to really look out for. Sydney Airport with the acquisition offer, it doesn't really matter how they do as long as the acquisition goes through. But yeah, that's basically what I expect for the next week coming up in earnings. Thank you guys for watching, and I'll see you next week.